welcome back for another Coffee with the Collective. I've got Emily Ackerman here, our amazing senior broker partner of Chicago Home Collective, kick-ass realtor who's been doing this for over 8 years now, chatting with us today about the state of the Chicago real estate market because it is operating very differently than the rest of the nation, and it's all happening quite fast. So we really believe that educated clients are empowered clients, and we want to do everything we can to keep educating you on the current evolving market. So today we're going to talk about the past, which was just this past fall. We want to talk about the present, the future, and the opportunities, along with necessities if looking to do anything in this current real estate market. So I guess I'll kick it off. Let's talk about the past. Want to talk about the past? So this fall was super interesting. Interest rates hit a near 7% interest rate, which is bananas because it was 3% in May.
A year ago.
So it was nuts because people kind of like, it was a slow increase throughout May, June, July, August, and then really hit a peak point so far of nearly 7%. And when that happened, we really sidelined a lot of clients who were looking to buy, who, could handle some moderate interest rate adjustments, but the extreme, unfortunately, had them really reevaluating their financial positions. So a lot of buyers kind of stepped out of the market. And when that happened, the buyers that were still around were actually able to negotiate some decent deals because the demand were down. And so is that what you saw too, Emily? I know that's like what I was experiencing with my transactions.
Oh, yeah. I mean, I feel like there was like this blip of activity post Labor Day, which we always kind of get in the Chicago market. And then things really started to quiet down as the feds were announcing these rate hikes. But then, man, like Christmas to New Year's, people were out and about. And I feel like our team, we had negotiated several deals like well below market just because those sellers were in a position where they were like ready to offload. They had longer market times and they were like, okay, I can either, shoot my shot in the spring and not have that certainty or make a deal now. So thankfully we had some buyers that really came out on top, which felt good.
Yeah. It felt awesome after the last couple of years we've had.
Yeah. I know. But then that's shifted quite a bit in recent weeks because to slide more into the present tense.
Tell us about the present, because right before we started this recording, you were getting text messages from new clients, and it has seemed like a pretty steady stream since the year kicked off, right?
Yeah, I mean, I think there's like this whole, post New Year's and resolutions coming to fruition and people wanting to buy homes and knowing that that's like on their 2023 vision board. But so we're kind of getting like the standard text messages that we tend to receive, but that's coupled with some of those buyers that you spoke to that were sidelined the tail end of last year. So I feel like there's a lot of built up buyer demand that's about to strike the marketplace, which I think is just interesting because a lot of like the clickbait and what's been just, like mass media of just the market's behavior is a little bit different in Chicago. So.
Yeah. And I think that's so important to note. We are such a unique market and compared to the rest of the nation for a lot of reasons. We have great schools, we have great transportation, we have great, reasons to come here for jobs. And we've really managed to insulate ourselves, I think. But because of it, we have a lot of clients coming to us with headline news that is not relevant, which is why we're really having this conversation. So yeah, I mean, I think you hit on the present. We have those previous clients who've carried over into this year. We've got new clients, new demand. The demand is really there. And unfortunately, the supply just still isn't at all. That is something that we're even marking as a little bit lower than normal on our books, is we're just not seeing the same percentage of sellers out of our transactions that we normally do, because people do have low interest rates. They want to stay in their homes. They don't necessarily want to buy at this higher rate market. And so it's caused like a real constriction of inventory, along with just completely underbuilding. We're just not building enough for our population. So this current market is warming up with demand and still tight on inventory, which will make for an interesting, I think, storyline as the spring evolves. But what are you predicting for the spring market?
based off of what we both just shared, I anticipate that there are going to be plenty of multiple offer situations. You and I both were a part of our own separate ones this past weekend, which I think is just a little bit of a taste of what's to come because ultimately, and really like deducing this down to a simple equation, if there's high demand and low supply, then ultimately we're going to be seeing that. But Kel, do you feel like, last year we all know the craziness that came with 2022 and these like multiple offer situations and people, writing in everything plus their firstborn. So I'm curious what you're thinking, just like the buyer sentiment would be like this spring.
Yeah, I think buyers are cautious that they're not overpaying in a market, especially with some other just economic uncertainty right now.
Yeah.
So they're not interested. Yes, we have multiple offer situations, but each of the ones that I was involved in last weekend, my buyers were like, hey, we know this is what they're asking. We know this is what it could sell for, but this is what I'm comfortable paying. And so I don't think that we'll see insane price appreciation like we have the last couple of years.
Yeah.
I think that, yes, there will be a lot of multiple offers, but still, not crazy over asking price numbers or things like that. So that's that's kind of what I'm predicting as well.
And I think with buyers just discerning around price, they're also really sensitive to property condition and that they feel that they're getting a really good value. Because I think there were some buyers, not ours, that were overpaying for some properties that were just not worth it. And it was a competitive environment, but that didn't necessarily mean that it was worth overpaying because there was still a lot of work to do. So I think right now the trend, which it's been for a while, but majority of buyers valuing more of a turnkey property where after this like journey to finding a home, they don't feel like they have to do so much work after the fact because it's expensive and it's hard to get on people's calendars. But I think that also speaks to the listing process. So what are you advising some of your sellers in today's market and how they need to position themselves to buyers?
Yeah, I think it's such a great question because buyers do want move-in ready. And because they are sensitive to costs and things like that right now, it's even more of a priority. So really a way to help, get top dollar and have a buyer feel comfortable with that is to do what you can for in your property to really help it shine, for lack of a non-cliche word, right? But it's so important. It's so important to make a good first impression. And our team has a whole approach and process for how we go about doing that. But really, it's still so important to position your property in a responsible manner in light of this market, in light of, yes, buyers want to buy. Yes, there's low supply and high demand, but they're very savvy and they're still cautious and thoughtful about this. And so meeting them halfway on that and getting your property properly ready. Gone are the days, and we never operated like this, but gone are the days of just putting a sign in your front yard and opening the front door and thinking that was enough. So if you want to sell, definitely work with an agent who can partner with you in creating like that maximum strategy of how to sell for that top dollar and really appeal to what the buyers are looking for in this market right now. So, I think that's such a great point about what buyers are looking for because it's true.
Yeah, and definitely
it is true. Do you think that there's opportunity right now? I mean, we might have covered it a little bit, but I will say, I thought you heard me say this like last week. I was like, we have 30 days of negotiations. Like the window is closing to negotiate on a deal. I thought, truthfully, I knew it was very real November, December, which is why we were doing it.
Yeah.
Then I was like, okay, like, let's see what comes in the new year. And I'm like, all right, like we can still negotiate. There's still, we can use this to our advantage. And the moment interest rates went down a week ago, it felt like we had like a moderate interest level of buyer demand and then an even heightened level. And so I think the window is closing to negotiate.
Yeah.
But I still think there's some other opportunities there. I know you and I were speaking about multi-unit. If you want to share more, I think that's such a wonderful asset.
Yeah, I think multifamily is always a great avenue to take if it's something that you're open to. It's a very different process than looking for like a primary residence, for instance, a single family home or something like that. But it's a great entry point into owning an investment property and growing with that investment, because we've seen really strong and steady rent rolls throughout the past few years. And many times you can get into a multifamily at a lower down payment, and the rent that other unit is paying is helping subsidize your mortgage, which is helping you build wealth at a faster rate, and then even helping you get to that next investment property. So I'm a huge
Yeah.
proponent for multifamily if you feel like that's something that you would like to do. And those have always been strong in Chicago, the multifamily market.
They really have. Like, I own a multifamily. It's an amazing asset to have in the portfolio. And I think even what you just touched on with rentals, there's still a lot of demand for housing. And so the rental market should stay pretty strong. And so I even think this is a really unique opportunity for investors, because on paper, it doesn't seem like it necessarily for the traditional inventory. But because buyers want move-in ready, there is some inventory that's being completely neglected just because it doesn't like shine, right? It doesn't have the sexy kitchen, or
Yeah.
it's terrible paint colors, or there's things like that that you could really take advantage of as an investor and put some of the money in to turn it around and then rent it out at a nice, premium, because rental prices are still really high in Chicago. So that's
Yeah.
another opportunity as well. But we plan to come on here and regularly update you because things are changing so quick. But if you have questions, please reach out. Let us know. As we said, Chicago is a market of micro markets. So every neighborhood is experiencing something a little bit different. They're not all performing the same. So if you want specifics on your neighborhood, we're here to talk anytime. And if you're not here on this video watching us, you can find us on our Instagram, Chicago Home Collective, where we post tips and updates all the time there as well. But so good to see you. Thanks for chatting.
Talking to you. Until next time.
Until next time. Bye.
Bye.